Good morning, everybody, and welcome to today's midweek update. We've got plenty to talk about today. If you were here yesterday for the Trade Smart Tuesday, where we discussed this market traffic light system, this is going to build on top of that. If you weren't there for it, don't worry. We're still going to walk through everything, and you'll have plenty of time to ask questions as we go through it. And I encourage you to start right now. If you have questions that you're coming to with either the market's health or about certain stocks, go ahead and put them into the chat right now. We'll get to them in just a little bit. Um, but do type in your questions early so that way I could go back, find them, and then answer them later on. It'll make life a bit easier. So, all that said, let's jump into the midweek update. So here we have the NASDAQ, and the NASDAQ is pushing into new highs yet again. So a question that you might have is, well, what should we be doing here? Should we be putting more money to work, putting less money to work, maintaining the status quo? What should we be doing, and why should we be doing it? Here's my stance on the NASDAQ and also on the market as a whole. I'm seeing this as a condition to start to reel things in, a condition to start to take profits on trades that have been working for a little while, and also a condition to put on smaller sizes for new trades, at least for the time being. And here's the reason why. You can see the NASDAQ right here. The NASDAQ is getting further extended, and we still have plenty of time left in today's session, but so far we're at the low of the trading range. Yesterday, we closed at the low of the trading range. So if that cycle continues, part of what that's indicating is that people are starting to sell into strength. Price is still moving higher, but they're using that strength as an opportunity to sell. So, okay, fine, that's one thing. Couple that with a couple of other things that I've been noticing recently. One, this down here. Let's shift this over so you could see it a little bit better. This down here, this indicator, this is just the number of stocks making new 52-week highs versus new 52-week lows every single day. Now, you would kind of think that if the market's making new highs, the stocks within it would also be making new highs, right? That just kind of makes sense. Well, we've got the opposite happening here. There's more stocks making new 52-week lows than 52-week highs. So I ask you this, how long could that continue if the market's going to continue moving up, right? There needs to be a leveling off. So either the market continues to make new highs and the stocks within it start to make new highs as well, or the market pulls back. Now, the NASDAQ doesn't act in a vacuum. Neither do the other indexes. So what are they busy doing? All right, so let's switch things up. Here's the Russell. The Russell has been moving sideways for a fairly long period of time. Presently, it's trading below its 50-day moving average. That red line, that's an important one. That's an important moving average. When price is below that line, it's basically telling us that over the intermediate term, over the past 50 days, prices have found some resistance. Prices are leveling off, and, well, they could be ready to consolidate a bit more. That's what the 50-day moving average is telling us here and how price is responding to it. But it's not just the Russell either. You also see that happening over here on the NYSE, right? The New York Stock Exchange. Over here, price is still moving sideways, and it's been moving sideways now for a couple of months. So when you have the NASDAQ moving up, the stocks within it making new 52-week lows, you have the other indexes also moving sideways, then that's something that's telling us that time to maybe reel some of it in. Maybe take some profits, take some risk off the table, maybe be a little bit tighter with some new trades. Here's a trade that I put on recently, right? Not Nvidia. I traded Nvidia back here and had a nice 50% move on that one. But I recently traded Kava, right? So got a lot of indicators on here. Let's turn some of this stuff off. And so here's Kava. So I mentioned this one I think I mentioned it over the weekend. And I saw it setting up in this VCP pattern. I mentioned that this one was a leader and it was behaving as a leader for a very long period of time. It gave us a nice move, 30%. If you held it for longer, it gave you about a 50% move. And then it formed this volatility contraction pattern where price had one contraction, two contractions, and then a third contraction. And the volume on this thing was doing exactly what you wanted it to do, at least before it pulled back. Volume was higher on the upswings, lower on the downswings. And that's great. So what happened here? Well, on Monday, price made a new high. And when it did that, at the point of time in the day, looked fantastic. So I decided, okay, I'm going to buy this one. Did I buy a large position in it? No, I didn't. Even though this one was a leader, even though this one was setting up in the type of pattern that I like, even though the group at the time was doing fairly well, I didn't go in heavy on this. And the reason why was because everything that we spoke about a few moments ago with the general market and how things are getting extended and how there's this discord in the market where you have one side pulling one way, another side pulling the opposite way. Right? Well, when that tends to happen, it tends to lead to a lot of chop. And so by understanding those dynamics, we're able to hedge our bets, so to speak. So still wanted to take this trade, so I put it on a lighter position. Then I saw this happen on Monday, right? So let's turn off the annotations for a sec so that way I could roll my mouse over here and not get a bunch of stuff. So price popped higher, closed on its lows. Ooh, that's not good. So what did I do? What I did was I raised my stop. I took my stop from starting down here. I raised it to just under the prior day's low. The reason why is because it still gave me a few different layers of confluence on this trade where if price could bounce and potentially retest, okay, fine. But I wanted to be out of this trade if price started higher on the day, which it did, and then reversed and sliced through. That's another sign of strength being sold into, intraday strength being sold into for what was already showing to be a kind of a weak breakout. So I ended up exiting here at about 93 bucks, right? 92.90 was the exit. Then price continued to fall and continued to fall and continued to fall. So instead of taking a 7% loss, I took a 4% loss. And if I didn't sell at all, no stop loss, this thing so far is down 14% in 3 days. So that highlights a couple of things, right? It shows the importance of having a stop loss. If we don't stop our losses short, then we'll have large losses. The only way to prevent a large loss is by taking a small loss. It also shows some statistics, right? If we have an edge, we're going to have both winning trades and losing trades. The way to allow that edge to work is to accept both of them, but make sure that our losses are small, right? So that's why instead of exiting down here, I'm exiting over here with about a 4% loss. And we're also want to let our winning trades run, which is why with Nvidia, right, getting in way down here, letting that one work. And how do you know that it's going to work? Just observe well what it's doing each day. If it continues to do what we want, right, which is make new highs, then you let it run. It's almost that simple. But we'll open up some questions here. We've got a lot of people joining us live, especially over here on Instagram. Welcome, everybody. We've got Akash, Loti. We've got Juan. Welcome, everybody. Cabello. We have Yusuf. Welcome, welcome. All right. Let me know what questions you guys have. Go ahead and type them in if you have anything. Oh, Dr. Stocks over there. Welcome, welcome. Okay, so back to midweek updates. So another thing to help us figure out, well, which way is the market likely to go? Is the market likely to get into some trouble, right? So are we likely to hit some resistance? Are we likely to experience some chop? That's going to come to us by way of the stocks that are setting up. This week, there wasn't a whole lot setting up. In fact, the one bright spot of stocks that were setting up so far anyway was this one right here. Gene DX, ticker WGS. Now, this is one that we mentioned in the newsletter over the weekend. And if you hopped on board this so far from the pivot, it is up roughly 10%, 11%, right? And this one has been squirrely too. This was by no means an easy trade. This, in order to trade this, the proper entry would have been at 29.17. The proper execution would not have been from the daily time frame. No, you would have needed to go down to an intraday time frame. And my preferred intraday time frame is the 30-minute time frame. So if I'm looking at this on a 30-minute chart, you can see how price initially popped above here, right? Popped through the pivot, pulled back, and then consolidated, right? So that created a price shelf on the intraday charts, and it also created a shelf or a smaller ceiling on the intraday chart, and that created a risk of only 4%, right? So that's something that can help us get in with a much tighter entry, but it needs to be managed a little bit differently. It needs to be managed on the intraday chart. So if you did take this one, at this point, you've had almost a 3R trade, well, which is fantastic. If on average, if you're getting 2R trades, you're on your way to making a lot of money in the market. The reason why is because if you were to take a coin, right? Just take a coin, flip it, heads you win, tails you lose, heads you win $2, tails you lose $1. Just flip that coin all day long. So that is pretty much where things are at now. There's not a whole lot of activity. I only have a couple of trades now that I'm still sitting with. I'm still sitting with CyberArk. And let's zoom out on this and get it over to the daily time frame. Right, this one has been a winner. I started this position back here in mid-June, took a scale out on it, and now it is consolidating. And I've raised my stop up to today's low. Not today's low, I'm sorry, yesterday's low. Split stop here. Saw a question come in from my good friend over on YouTube. Keep it simple. Do you buy pivot resets? How do you identify pivot resets? So I'm not quite sure how you define a pivot reset. I've heard a couple of different people talk about pivot resets. So there's a couple of different definitions of what that might be floating around. So I want to make sure that we're both on the same page as far as the definition of it goes. So here's what I think of a pivot reset. So let's go back to Kava, right? So let's say actually Kava might not be the best example because it's already fallen significantly. But let's say Netflix, right? This is another one that broke out on Friday, and then I ended up selling this one today for a small loss. I cut the loss uh, instead of cutting it down at the original stop of 4%. I was able to cut this one at 1%, right? And you might say, well, who wants to take a loss, right? Well, why not give it some more room? You planned on having the stop be way down here. Give it a chance. The reason why I like to cut trades earlier is because my style is such that I'm a swing trader, right? So I like to have a lot of activity in my portfolio. Not a lot, but enough activity, a lot of churn in the portfolio. So because of that, I like to keep my losses as small as I possibly can. The reason why is because it means that my winners need to do less heavy lifting. And because I've studied my past trades, I've done post analysis, I know that most of my trades work fairly quickly. Most of my winning trades work fairly quickly right out of the gate. So when price starts to behave like this, it's not a good omen for that particular trade. So I'd rather exit early and then see if price sets up again. So back to your question, keep it simple. So my thought on what a pivot reset could be would be, say, if price were to do a U-turn today and get right back through that pivot. That would be a pivot reset. Then or maybe the within the next day or two. Would I buy that? The answer is it depends, right? It depends. Does that pivot work on a different time frame? Right? So far, if price were to do that tomorrow, the pivot would not work on the daily time frame. On the daily chart, the pivot would move to uh, this prior high from Friday, right? So right around 697 and a half. Put it on an intraday chart. Let's take a look at the 30-minute chart. Maybe it works down there, right? So do you see how the 30-minute chart is set up? Well, let me fix this, right? Let's reset this, zoom in a bit, and get the price over here. Right? So do you see how this is setting up? You have this peak, then price drops, then you have this peak, then price drops some more. So at least you could use this as an early entry because this peak is so close to this peak. I don't really like the idea of using this as an early entry here because you still have some prior resistance potentially from over here. Also, look at the volume that's come in on the downside. That makes it where it sort of tips the odds against this trade. It doesn't make it impossible. It doesn't mean that price can't blast through on even heavier volume, but it's a potential warning sign. In a nutshell, what I prefer to do rather than looking for a pivot reset would be to look for a fresh entry, wait for price to set up again, and then take another stab. All right. Well, what other questions do we have? Let's scroll over here on Instagram and see what questions are coming in over here for you guys. All right. How about you guys over on YouTube and X? Marcelo shouting out win. Okay. Yeah, winning is fun, but so is losing, so is trading. The whole trading game becomes fun when you're playing it the right way. So how do you play it the right way? The way to play the trading game the right way is to come up with your own set of rules and play by the rules. You know that maybe that sounds overly simplistic, but it's the truth. Picture you were playing a game of basketball. Somebody comes out and they tackle you. That wouldn't be a very fun game, right? There's certain rules to the game. If they took the ball and they heaved it over the fence and they called it a home run, that wouldn't be a fun game, right? Because you're not playing baseball, you're playing basketball. So you need to have rules of the game and you need to follow the rules of the game. Then you could learn how to become better within the rules that you've defined. Here's another question from Keep It Simple. Are the chart patterns and tactics you use universally applicable? I mean, on stock market and uh, the stock market for other countries. Yes, they are. So not only are the rules and chart patterns and tactics that I use applicable for stocks, they're also applicable for crypto. I look for the same types of patterns when I trade Bitcoin, Ethereum. I've traded Ethereum Classic in the past. I've traded Doge in the past, and some of my biggest winners came from crypto. If you read my book, The Trading Mind Wheel, which, by the way, is available on Amazon, gotta give you the shameless plugs whenever I can. That was the trade where I made 800% in just a few months trading Doge. And how was I able to trade Doge for such a huge return? The same kinds of patterns that I trade in stocks. And by using the same kinds of management that I use for stocks, following the same types of strategies for position sizing, right? All this stuff can still be utilized. Sure, there's some nuances between different asset classes, but the broader concepts are universal. Any other thoughts, comments, or questions here? All right. So as far as the midweek update goes, we are pushing higher on the Nasdaq, and we're kind of in the chop zone. We want to be very careful, very cautious with any new trades, any new ads. We want to be cautious, right? Because if breadth was big and wide and there were plenty of high quality setups, then great. Go for those high quality setups, see how they work. Something else that's going to tell you a lot about the market. And by the way, let me switch screens and I'll share with you what I shared yesterday. And a little bit of what I shared yesterday. So let me share this here. So this window. Yesterday, we did a whole video on understanding the market conditions, this market traffic light system, where we look at the market through a three-dimensional lens: the general market, your system, and your personal performance. How you perform is a great way to tell you, should you be betting heavy or light, should you be taking gains quicker or slower. The reason why is because if you have a system that's guiding you to the best ideas, then the ones that you end up trading should give you some really good insights about the market. The last couple of trades that I put on Netflix, that didn't work. I put on ESTC, that one didn't work. And CyberArk, it took 2 weeks to make 8%. Right? That for me, that's a while. Then MFC, that one's still working, but that's also another slow mover. So, okay, it's telling me that the conditions for what I'm for my style and what I'm looking at have shifted a little bit. So I should shift a little bit until things prove otherwise. This tactic, this strategy here of you defining your general market, you defining your system, you defining your personal performance and looking at the market through those lenses, that can help you a lot. Here is a question from Dr. Sadki over on Instagram. What do you think about the dollar index? I don't trade Forex, so I don't think a whole lot about it. Question from Pavang over on Instagram. How much profit is going on, sir? How much profit? So if you mean how far a trade's going right now, they're going a little bit less for the most part. There's still the diamonds in the rough. There's still these ones here, right? So let's show you a few of the diamonds in the rough. So switch back over to the charts. And let's pull up a daily chart of Tesla, right? Because Tesla has been flying lately. Right, so here's one of the diamonds in the rough, Tesla. Tesla, since the end of June, is up about 40%. That's fantastic. That's a diamond in the rough. Not a whole lot have been moving like this. One of the diamonds in the rough from my portfolio or from the setups that I've been observing that we mentioned earlier, WGS, right? Since for this week, price is up about 10%. So there's a few out there, but we need to be selective. Edward over on Facebook, liking the video. Thanks a lot, buddy. I appreciate it. Keep it simple. How do you analyze the market health or breadth in crypto? Excellent question. So let's pull up some crypto. And what I like to look at in crypto, right? So I keep the major coins all here. And actually, why don't I put Bitcoin, Ethereum? I'll move Ethereum Classic. I'll move Litecoin, all these to the top, right? So the major coins that you've all heard about, those are the ones that I'll actively track. And they, from my observations, they kind of behave a little bit like the major indexes in that if Bitcoin is moving one direction, Ethereum is likely not too far behind. Sometimes one is leading, sometimes the other one is leading. Same deal with Litecoin, same thing with Ethereum Classic, and then you get into the more minor coins, but they tend to move together. So if there's a move in Bitcoin, a move in Ethereum likely isn't too far off, right? So here is here's Bitcoin. And let's zoom out a little bit on Bitcoin. And so you see this move over here, right? Actually, this move started back here in mid-October of last year. I was able to capture that. At the same time, Ethereum was having a similar move. Let's take a look at Ethereum. Right, so here's October, right? Almost the same time, it's having its move. Then, when did it top out? Right? It started to roll over here, and now it's consolidating. It's moving sideways. It's in this, if you're familiar with Stan Weinstein's work, this is what's called the stage 3 consolidation. Maybe it comes back out of this and starts a fresh trend, a fresh uptrend, maybe it rolls over. We don't know yet, but what we do know is that this thing needs plenty of time. Ethereum needs time, Bitcoin needs time. Both of them are moving sideways, and those are the ones that I focus on. Could you find some of the minor coins? Sure. I'm not focused on those. I'm just focused on really those four. Question from Pavang over on Instagram. Sir, what is the key indicator you are using? I just use price and volume as my main indicators, and everything else is a derivation thereof. So I'll look at moving averages, right? So moving averages help to quantify the price action. I'll look at relative strength. That's this line down here. Since we're looking at crypto, it doesn't really apply too much, but it's relative strength versus the S&P 500. So when I'm looking at stocks, I'll look at the relative strength line, and that'll show me which ones are the leaders. And that's basically it. Time for one more question, then I've got to hop off because I have a coaching call with one of our VIPs. Let's see. I saw two questions from Keep It Simple. We'll round it out with those. So first question, how do you handle shakeouts? And are shakeouts constructive? Sometimes yes, sometimes no. It all depends on how the shakeout is happening. So for example, if we're looking at Kava, right? Let's zoom in on Kava. This could be considered a shakeout, right? So price was behaving well, and then you get this action, right? Change in character. So what's that mean? Well, if it comes out of this and it forms another base, there's going to be a lot of the short-term holders that have been shaken out. But the long-term holders are the ones that would still be in it. So in that way, it's constructive. When it's happening in real time, right? So for right now, at this point in time, we don't know if this is a shakeout or if it's done. So the only way to manage this is to manage it by your rules. If you're shorter term like me, if you're a swing trader, you're not sitting through that. If you are more intermediate term, or if you're a position trader, say that you're more like my friends Adam Sarhan, right? Or Mike Webster, you're probably at least holding something through this, right? Because they tend to be more intermediate term. It doesn't mean that one is right and one's wrong. It's a matter of you have your rules that lead you to a result, and that result should be a rise in your equity curve. And then it's up to you to play by those rules. All right, well, let's see. I've noticed it too that main coins like Bitcoin and Ethereum act like the indexes do. Yeah, exactly. And that's why I watch those. So, all right, time for me to hop off. I hope that you enjoyed this episode of the midweek update. If you did, make sure that you like and subscribe wherever it is that you are watching. I appreciate the questions that you guys have asked. It's always a great time. And oh yeah, by the way, make sure that you subscribe to our newsletter if you haven't already, marawealth.com/newsletter. And there's a lot of great value in there. There's another newsletter that'll be going out later this afternoon. So make sure that you're a part of that. marawealth.com/newsletter. Until next time, I'll see you then. Take care. Much love and God bless everyone.